Imagine your money is working harder than you ever could, even while you sleep. Right now, you have $4,200 just sitting in a standard savings account. While it sits there, your bank is actually using those funds to back a massive $340 million loan. Every 2 weeks, your paycheck arrives, you spend most of it, and you tuck a tiny bit away. You have heard the term compound interest before, maybe back in school, but you never really paid attention. One day, you decide to be proactive and open a high-yield savings account with an annual percentage yield of 4.5%. You feel smart as you set up an automatic transfer of $200 every single month. The system runs quietly in the background without any help from you. By the end of the year, your account has generated exactly $89 in interest. You look at that $89 and feel underwhelmed. It does not feel like enough money to matter. In a way, you are right. But this journey was never really about those $89. It was about the financial mechanism you just activated. The machine is already in motion, even if you do not yet understand the scale of what it is building. You are still just a depositor, but the gap between you and a real investor is closing fast. You take the leap and open a brokerage account, buying an index fund with $500. You hit confirm and realize that the S&P 500 has averaged a return of 10.5% annually for 8 decades. You turn on the automatic reinvestment of dividends so every payout buys even more shares immediately. In the first month, you have $500 invested and a mere $1.40 in gains. By month 12, you have $6,300 invested and $180 in gains. Suddenly, the market takes a dive, dropping 6% in 1 week. Your portfolio vanishes by $300 overnight. Your heart races as your hand moves toward the sell button, but you stop. You put the phone down, take a deep breath, and you hold your position. You see a post online saying that holding was the right move and you feel a surge of pride. But you should not need external validation anymore. You run the numbers, $500 a month for 40 years at 10% interest. The result is $3 million. Something inside you shifts. You stop viewing money as a tool for spending and start seeing it as a tool for production. Every dollar you invest is like a silent worker that starts cloning itself every single year. It works without needing rest, without complaining, and without you having to watch it. It simply compounds. Now you are a true investor. The machine is picking up speed and you finally see the structure taking shape. You now have $47,000 across various index funds. Every Sunday evening, you track your net worth with precision. You maximize your Roth IRA with $7,000 a year, knowing it will grow tax-free forever. You contribute exactly enough to your 401k to grab every penny of the employer match. You discover that a 1% expense ratio on $500,000 would have cost you $360,000 in lost gains. You immediately switch to a Vanguard fund with a 0.03% expense ratio. Your portfolio is now 80% stocks, 15% bonds, and 5% international assets. You rebalance every quarter without exception. When a friend asks for investment advice, you give them the boring truth. Automate everything, diversify your holdings, and never touch the principal. They want to hear about the latest cryptocurrency, but you remember what that cost you in the past. The real secret is not a trendy investment, it is time. Compounding does not move in a straight line, it accelerates. Saving your first $100,000 takes 8 long years. The next $100,000 takes only 4. The one after that takes just 2.5 years. Eventually, your portfolio earns more in 3 months than you earn from your salary in a full year. There is no applause and no audience for this. Building true wealth is an invisible process fueled by discipline. You are no longer just investing, you are optimizing every single dollar. If you want to keep optimizing your financial future and master these strategies, make sure to follow us here at Billy Finance by subscribing to the channel. Your net worth crosses the $400,000 mark. You do not throw a party. Instead, you open your spreadsheet and recalculate the trajectory. Capital is accumulating rapidly now. Your only job is to stay out of the way of the machine you built. A sudden hike in interest rates causes your portfolio to drop 19%. On paper, you just lost $76,000. Instead of panicking, you add an extra $600 to your investments that month. You buy the dip in total silence. Building wealth is a quiet and often boring endeavor. It rewards consistent behavior without any immediate signals of success. You move beyond simple index funds into municipal bonds for tax efficiency and real estate investment trusts for yield. You stop worrying about annual returns and start thinking in terms of decades. The calendar on your wall is irrelevant now. You have a 12-month emergency fund, airtight insurance, and your estate documents are all signed. People in your circle start calling you lucky. You do not argue because you know exactly what it took to get here. It was not luck. It was a series of correct decisions made consistently over time. The machine is roaring now. It no longer requires your constant attention to grow. You have become a builder of wealth. The next level is not reached through more effort, but through reaching a specific threshold. Your net worth surpasses $1.2 million. The entire financial system changes for you. New doors begin to open quietly. You are now considered an accredited investor by official definitions. The private market reveals itself for the first time. You are offered a private equity opportunity with a $50,000 minimum and a 5-year lockup. The projected internal rate of return is 20%. You analyze the 2-and-20 fee structure, where the manager takes 2% annually and 20% of the profits. You read every single page of the offering documents, and then you wire the $50,000 without hesitation. You enter a private credit fund that offers 12% distributions. You finally understand the risk premium and the value of giving up liquidity. Most financial advice ignores these high-level instruments. Above a certain wealth threshold, the rules of the game change entirely. Your portfolio now produces wealth through equity, dividends, private credit, and tax offsets. You are no longer playing the same game as everyone else. The board has been swapped for a completely different one. It was never hidden. It just required significant capital to access. Now you have both the knowledge and the funds. You are a capital allocator. The next stage does not ask what you want. It asks who you know. The number hits $6.4 million. You say it out loud once and then never mention it again. You reach out to a family office wealth management firm. The minimum requirement to even talk to them is $5 million. They offer you access to pre-initial public offerings and specialized hedge funds. You notice that your effective tax rate this year is only 11%. This is not by accident. It took weeks to structure opportunity zones and charitable trusts to protect your assets. The wealthy do not just have more cash, they live in a different financial reality. Your children now have college savings accounts, seeded with $150,000 each at birth. At 7% growth over 18 years, those accounts will hold $510,000 before they even graduate. This is the architecture of legacy. You are not just building wealth for yourself anymore. You are building wealth for people who have not even been born yet. At this scale, compound interest is no longer a personal finance tip, it is structural power. You stopped checking daily returns years ago. The machine does not need your eyes on it to keep functioning. You are the architect of a financial empire. The next level has no name on the door, but you already know where it is. Your family office is now managing $40 million in assets. You stopped counting the individual dollars a long time ago. You sit on the boards of private companies because capital at this level creates proximity to influence. You co-sponsor a venture fund with $20 million committed. Your name appears on the legal documents, but not in the media. You find yourself having dinner with former government officials. You did not seek this out. The capital created the connection for you. At this scale, compound interest is a mechanism of economic stratification. Your returns and tax efficiencies are subsidized by access that most people will never reach. When the market crashes by 30%, you have the liquidity and time to see it as a buying opportunity. Those without your safety nets are forced to sell at the bottom. Their losses move through the system and eventually find their way to you. The system is functioning exactly as it was designed. You are now a systemic participant in the global economy. The next level is not just a room. It is a permanent structure with no ceiling. You are no longer an individual, you are a trust, a foundation, and a partnership. Your foundation holds $200 million in assets. It earns 7% and distributes 5%, keeping 2% to grow forever. The name on the building is not yours. It is the name of the trust. You prefer the privacy that comes with that. Your great-grandchildren will be accredited investors the moment they are born. The compounding started long before they arrived. They will sit on boards because your family name carries the weight of decades of smart decisions. Compound interest does more than just grow bank accounts. Over enough time, it converts raw capital into lasting legacy and human connection. They fall into place one by one. You only just started to pay attention to the pattern. It has been ages since you bothered to verify your investment returns. The engine does not require your intervention to keep moving forward. In truth, it never really did. At this advanced stage, the process of compounding is no longer a personal endeavor. It has become entirely structural. The system functions flawlessly without your identity, your physical presence, or even your focus. This machine has completely moved beyond your control. It hasn't required your help for a very long time now. This right here is the ultimate destination. Somewhere out there, a 23-year-old is walking into a gleaming glass skyscraper for the very first time this morning. He is busy opening his very first investment account. He schedules an automatic deposit of $200. He feels incredibly clever for taking this step. In his mind, this is all about achieving financial safety and retiring in comfort to build a better future. He has no idea that the $200 is completely besides the point. The true power lies within the mechanism itself. It was always about the mechanism, and soon he will understand that as well. Don't forget to subscribe to Billy Finance for more deep dives into the world of money. Thank you for watching, and please leave a comment below to share your thoughts on this journey. Goodbye for now.